Hi and good day to Doctor and my fellow friends. We are from Group 9 Commercial Bank and Operation, and this video will focus on two scopes of financial institution, which are local commercial bank, which is Maybank Berhad, and international commercial bank, which is Citibank. The banking system is the most important part of the financial system in the country. It is because bank act as a financial intermediary that gives capital from excessive sources to people who need the cash. By doing so, banks can provide credit to business, enable them to invest and create jobs. As a result, can boost the economy. The health of the economy in the country is directly linked to the health of the banking system. Any financial system will fail if its banking system is weak. Maybank was established on 12 September 1916 as Malaysia's first local bank with the mission to provide banking facilities to indigenous enterprise and small businesses. In the 1970s, Maybank became a financial driver by supporting economic growth in Malaysia via country credit plans and mobile banking. At this time, Maybank is known as the coffee shop bank due to its branch in former coffee shop made the bank accessible and familiar to people. It started in a corner shop on Jalan H.S. Lee and expanded quickly across Southeast Asia. For the future, Maybank continue to innovate, focusing on seamless banking experiences and supporting communities via technological advancements. In Bangladesh, Citibank is one of the oldest private commercial banks still in business. The bank began its journey on 27 March 1983 when it opened its first store at Bibi Avenue in Dhaka City. Currently, the Citibank has 133 branches in all of Bangladesh, including online branch, full-fledged Islamic banking office, SME service center, and SME branch. It started as a standard business, but is now a well-known multifaceted company that follows global best practice and leads the way in new technology. Malaysia operates two types of banking system, which are conventional banking system and Islamic banking system. To facilitate the system according to the types of the banking system, Bank Negara Malaysia must provide the regulation that fit with a particular banking system. BNM acts as the regulator of banking institution under the Financial Services Act 2013 IFSA, Islamic Financial Services Act 2013 IFSA, Central Bank of Malaysia Act 2009 CBA. These laws empower the central banks to ensure stability and compliance within the financial system. Other legislation under BNM is the Insurance Act 1996, Development Financial Institution Act 2002, Money Services Businesses Act 2011, and Currency Act 2020. Meanwhile, in Bangladesh, there are two banking regulatory authorities, which are the Central Bank of Bangladesh, which is Bangladesh Bank, and secondly, Bangladesh Financial Intelligence Unit. Bangladesh Bank is set the rules, laws, and standards that banks must follow to keep the financial system safe. Meanwhile, the Bangladesh Financial Intelligence Unit is the main organization that fights against money laundering and terrorist financing. The Central Bank of Malaysia, which is Bank Negara Malaysia (BNM), is a legally recognized organization that commenced operation on 26 January 1959 and is governed by the Central Bank of Malaysia Act 2009. The role of Bank Negara Malaysia is to promote monetary and financial stability. The goal of BNM is to keep price stable while still encourage the growth. Bank Negara Malaysia in charge of keeping the banking system stable. BNM is the government's banker and advisor that give information on financial policy and how to handle public debt. Bank Negara Malaysia is also the only organization that can print the country's currency and manage foreign exchange funds. The Central Bank of Bangladesh is known as the Bangladesh Bank, owned by the government of Bangladesh and established on 16 December 1971 in Dhaka City after the Independence War and the eventual independence of Bangladesh. Its mission is to continuously grow as a forward-looking central bank with skilled, dedicated, and moral employees monitoring the financial sector and managing money to keep price stable and keep the banking system strong. Its mission is to formulate monetary and credit policy, keep track of the money supply and the payment system, keep track of foreign exchange reserve and the foreign exchange market, regulate banks and other financial institutions, and give the government advice on economic policies.
Good evening, Doctor. My name is ALIF HAIKAL bin ZAMAN. My matric number is 289978, and today I will be explaining about banking structure in both local and international. So for local, we chose Malaysia. So in Malaysia, we have Bank Negara Malaysia that act as the central bank for the country. So in the country, we have two different elements, main elements in the banking system, which is Islamic and also conventional. So for Islamic, it is governed by the Islamic Financial Service Act 2013. And what differs Islamic from conventional is that they don't use interest. They forbid interest in their daily transaction, but instead they use profit and loss distribution instead. So for conventional, It is governed by the Financial Service Act 2013, and as we know, it is interest based, which means that the main source of income for them is the interest charged on the users. So that explains the two main element in the country. And then we have more specific banking, which are Islamic banking, which accepts deposit and gives out loans, but they don't use interest. Instead, they use profit and loss distribution. And then we have commercial banking, which exactly the same as Islamic. It is the opposite. It doesn't use the profit and loss distribution, but instead they use interest based. And then we have merchant banking. Merchant banking is more specialized in dealing with bigger corporations or bigger companies, which they give assistance on or consultations on mergers and acquisition, as well as financial planning and other financial assistance. And then the last one we have financial companies. Financial companies is a non-banking institution which provides services like insurance or as well as the investment. Moving on to international. So for the international aspect, we use Bangladesh as the example. So in Bangladesh, we have Bangladesh Bank that act as the central bank for the country. So what differs Bangladesh from Malaysia is that Malaysia have two different separate act for two different main element of banking system. But for Bangladesh, they only have one act that governs all the banking and financial institution in the country, which is the Bank Company Act 2013. So the same as Malaysia, they have more specific banking as well, like commercial bank, which we know that they accept deposit and gives out loan. And then they have specialized bank, which focuses more on specific things like agriculture, community, and so on. And then we have non-bank financial institution which provides services like insurance, consultations, and as well as financial house. And then the last one we have microfinance institution which aims to help the poor or the unfortunate people of the country by giving small loans or small financing services to them. So that's all for banking structure. I'll pass it to the next presenter.
Good morning, doctor. My name is YADESH and VIJAYAN. My matrix number is 288240. Today, I'm going to talk about risk management for both banks. Let's start out with the first bank, which is Maybank, which is our local bank. There are three different risk management used by Maybank. The first one is well-defined risk appetite, which is acceptable amount of risk that Maybank is ready to bear in order to achieve its strategic goals, is outlined in the statement. Next is consistent risk identification, evaluation, and mitigation. These approaches focus on key risk categories such as market risk, liquidity risk, short-term obligation, credit risk, and operational risk in the internal processes. Next is proactive risk identification. Maybe establishing risk threshold for various domains, spreading out investment to lower exposure, or putting in place strong internal controls to avoid problems. Next, risk management by Citibank. The first one is structured framework, which is locating, evaluating, and ranking and reducing the different risks that a bank faces are described in this framework. Next is dedicated risk management department. Whole risk management procedure is supervised by Citibank's specialized risk management department, which is RMD, to guarantee the risk reduction technique are applied consistently. Next is continuous monitoring and improvement. Bank updates risk assessment on a regular basis, which keeps an eye on both internal and external variables and modifies the risk management of the framework. Now let's look at the bank profitability or bank performance ratio for both banks, which is Maybank and Citibank for minimum 3 years. We use three different ratios to find the profitability, which is net return on assets, return on equity, and net interest margin. The graph shows the ratio of each bank for minimum 3 years. Let's look at the first one, which is return on assets. In general, the ROA statistics of both banks are rather robust, indicating their capacity to produce profit from the assets base in spite of confronting operational and economic obstacles. Especially noteworthy is Citibank Bangladesh ongoing increase in ROA, which points to efficient operational and managerial practices. Next is net interest margin. Consistent Citibank consistently maintained a significantly high net interest margin compared to Maybank throughout the period. The higher net interest margin of Citibank could indicate a more profitable interest rate management strategy, potentially due to more favorable mix of high-yielding assets or lower cost funding sources. Maybank comparatively lower net interest margin suggests that it may face greater challenges in generating interest income relative to interest expenses compared to Citibank. Maybank may need to closely monitor to the interest rate in exposure and explore opportunities to enhance the net interest margin to improve profitability and competitiveness in banking industry. Next is return on equity. Over 3 years, Citibank consistently outperformed Maybank in terms of return on equity, indicating higher efficiency and profitability. Citibank higher ROE suggests better management practice and more effective use of equity to generate earnings. The slight decline in 2022 for both banks could attribute to economic uncertainties or strategic investment aimed for long-term gains. But both banks managed to recover in 2023. Citibank's superior ROEs demonstrate a stronger position and robust performance in banking sector compared to Maybank. Thank you.
Product and financial service provided by local and international commercial banks. For Maybank, we have Group Community Financial Service, Corporate Banking and Global Markets, Group Investment Banking, Group Asset Management, Conventional Insurance and Takaful, and lastly Islamic Banking. And for the Citibank, we have first deposit products, loan products, corporate and commercial banking, streamlined fund collection nationwide, payment transfer management, foreign exchange products, money market products, and lastly small and microfinance products. The local and international Islamic bank product and service. From the Maybank, we have three types of Islamic product and service. Firstly, we have the Islamic deposit and investment accounts, daily funds, where we have the kite interest-free loan, community murabah, cost plus profit sales, and investment account, mudarabah. And the second one, we have the term funds, where we have the community murabah deposit and the investment accounts. And for the second Islamic product for the Maybanks, we have under community murabah contract, first cash line, ASB financing, personal financing, executive salary financing, and IPF, Maybank Islamic personal financing. And lastly, from under this category product, we have the Islamic mortgage. And the last type of product from Maybank, we have the Islamic hire purchase, where we have the Al-Ijara, Murabah vehicle. And the second, we have the Ikhwan credit card, where we have the card interest free loans, card limits, and the ujrah fees on service, and the Mika, Musawama, Wan, Ujrah, and Wakala. And the Islamic product and service from the Citibanks, we have first individual financial account. For the corporate, we have the Islamic medium and long term financing, Islamic structure, financial service, Islamic project funding, and the treasury and risk management. And the second, we have for the small business, Islamic current account, Islamic easy and plus current account, Islamic business finance, and import and export. And for the business accounts and cards, we have the same as the in the financial accounts, but except for the import and export. And for the card, we have two type of card. We have the credit card and the debit card.
Moving on to changes and trends in the local and international banking environment for both local and international. So for this part, we will be discussing on the mergers and acquisition. So for both local and international, we can see there is a significant changes in the number of mergers and acquisition. So for the local, which is Malaysia, this is due to major changes in Malaysian banking, which are due to new regulations implemented by the government post Asian financial crisis, and then we have a shift towards larger transactions, which is affected by the current economy of the country Malaysia, which is gaining more attention in international trading. And then we have a technological advancement, since due in this current era, the technology is developing in a very fast pace. Then the last one is the new strategic plans. And then for the international aspect, is the same with the local, which is due to regulation changes, and then there's the global economic factors, which may be affected by the wars, maybe genocides, or probably from the sanction from the conflicting countries. And then we have, of course, the technology advancement, and the last one is the bank readiness for change, which they want to change for a better future for their bank institution. Now for e-banking in Malaysia, we have seen tremendous changes with notable improvement in online and mobile banking performance. So the key drivers include the technological advancement, of course, as well as changing consumer behaviors, governmental regulation, as well as the increased competition. Now we take Maybank as an example, which is one of Malaysia's largest bank. They portray this progress of changes with their enhanced online banking system, which is Maybank to You, as well as their mobile app, which is May. This platform now feature fingerprint login, instant transaction notification, as well as high-level security measures. This is due to the COVID-19 pandemic which further accelerated the shift to digital banking due to lockdowns and social distancing, which make it easier for us consumers to deal with the bank from afar. Not to mention the government as well as the Bank Negara Malaysia support has been very crucial to this positive of changes in the banking environment in the country.
Hi, my name is Muhammad HAKIM ZULKAFLI. My metric number is 287935. So for Maybank FinTech initiatives, in 2020, Maybank launched Maybank FinTech, focusing on innovation and startup collaboration. Leveraging AI, Dave automated processes, enhanced risk management, and personalized customer experiences. A prime example is the MAE app, an AI-driven digital banking platform that's seen significant traction. Citibank FinTech efforts. Citibank in Bangladesh, while smaller, is equally committed to FinTech. In 2018, they established a FinTech and Innovation Lab to develop new digital solutions and forge partnerships. They offer digital onboarding and mobile banking and have teamed up with Bcash to extend their digital reach. Regarding cryptocurrencies, both Maybank and Citibank are cautious. Maybank has adopted a wait-and-see approach, focusing on regulatory uncertainties while acknowledging blockchain's potential. Similarly, Citibank is observing the regulatory landscape before making any moves into cryptocurrency. Moving on to 10.4, Financial Inclusion. So, what is financial inclusion? Financial inclusion is essential for sustainable development, enabling effective financial management, savings, and participation in the formal economy, regarding the World Bank 2010-21. Maybank financial inclusion strategies are microfinancing programs, provide seed capital to entrepreneurs and small business owners, fostering job creation and income generation. Second is simplified account opening, reduces documentation and offers minimal initial deposit accounts to accommodate those with limited financial literacy or formal identification. And the last one is financial literacy programs, educate underserved communities on financial management and responsible use of financial products, enhancing financial well-being. Citibank financial inclusion strategies are rural branch expansion, establishes branches in underserved rural areas, providing access to financial services for geographically isolated communities. Second is agent banking networks, partners with local businesses to offer financial services in remote areas, increasing accessibility without extensive branch infrastructure. The third one is mobile banking focus, offers user-friendly mobile banking services tailored for low-income users, supporting local languages and limited internet connectivity. And the last one is partnership with Bcash, utilizes mobile technology to reach a broader audience, enhancing access to financial services. Next, in 10.5, we will discuss about responsible banking or green banking. Recognizes environmental impact and integrates sustainability into core strategy. Offers green financing solutions for renewable energy, energy efficiency, and sustainable infrastructure. Contributes to a greener Southeast Asia through financial resource allocation, and adheres to the principle for responsible banking by UNEP-FI, integrating environmental and social considerations. Impact on the financial sector highlights the growing importance of environmental and social considerations within banking. Banks like Maybank and Citibank are mitigating environmental impacts and promoting sustainability. Contributions to a broader shift towards a more sustainable financial system in Asia. And collaboration between financial institutions, governments, and businesses is crucial for a sustainable future. Citibank's sustainable banking efforts provides green loans for renewable energy and energy efficiency projects in Bangladesh, incentivizes businesses and individuals to adopt environmentally friendly practices, signatory to the principles for responsible banking, aligning with international best practices, implements internal green initiatives such as reducing paper consumption and promoting energy efficiency in branches.